Watch this before it's too late. There have been some massive updates in the last 24 hours, and they are coming straight from Palantir. Insiders knew this for a long time, but retail investors cannot even imagine the size of the market we are entering. This is a very important video for everyone, so let's not waste a second of it and get straight to the point. Disclaimer. Palantir has been growing at an incredible pace, and its stock price has skyrocketed by 110% so far this year. That kind of growth is massive. It means the company's value has more than doubled in just a short time. For investors, this is a huge deal because it's not easy for a company, especially one in the tech sector, to achieve such rapid gains. This shows that people believe in what Palantir is doing, and the company is hitting major milestones that keep pushing its value higher and higher. With such a huge rise in Palantir's stock price, people have started to speculate whether this is the peak for the company. Some think that after this kind of growth, there must be a big correction, or that once the hype goes down, the price could drop and never bounce back. This kind of thinking is common, especially in the business world and even more so in AI tech companies. Right now, AI is a hot topic, so investors often get excited and drive prices up quickly. But when the hype slows down or the market starts to adjust, it's normal to see prices fall or stabilize. This happens in almost every industry, especially in tech, where trends can create wild swings in stock prices. However, this doesn't seem like the case for Palantir. It's not just another hype train fueled by random, flashy AI tech. Palantir provides real value to the companies that use it, and it's expected to keep doing so for a long time. One Twitter user pointed out, companies that use Palantir tech will crush their competition that does not run on Palantir. Airbus, by using Palantir, was able to save a staggering $1.7 billion and boost efficiency by a third. That's a huge advantage. When companies can run more smoothly and save that kind of money, they gain a significant edge over their competition. Meanwhile, Boeing has been struggling, and we've seen this reflected in how it consistently fails to meet investors' expectations. Its revenue has been dropping, which puts the company in a tough spot. Investors start losing confidence, and when that happens, the stock price suffers, and the company's ability to innovate and compete gets hit even harder. Palantir's platform, in cases like Airbus, is incredibly useful because it helps companies optimize their operations, save money, and make better decisions based on data. It's not just about fancy AI. It's about delivering measurable results. In an industry where efficiency and cost saving are critical, Palantir's technology can make or break a company's success, as we can see in the difference between Airbus and Boeing. Based on these stats, it's clear Palantir isn't just a trend. It's a valuable tool for companies looking to stay ahead in a competitive landscape. Looking at Palantir from this perspective clearly shows us its real-world use cases and long-term potential. When a company like Airbus can save billions and boost efficiency so dramatically, it becomes obvious why this technology is valuable. Any company in the world would be interested in something like this because it directly impacts their bottom line. Saving money and improving operations are things every business needs to survive and grow. With Palantir, the possibilities are massive because there are so many companies out there across all industries that could benefit from it. From manufacturing to healthcare to logistics, every company wants to be more efficient and stay ahead of the competition. And with AI being such a critical tool in today's business environment, the market for Palantir's technology is enormous, filled with countless opportunities. As more companies realize how much value they can unlock using Palantir's platform, its long-term growth potential becomes clear. This isn't just a short-term trend. Palantir is positioned to keep expanding as more businesses see what it can do for them. And a huge update about Palantir today further proves this point of view. It was just discovered that Palantir has won a 5-year, $99 million contract with the U.S. Army. The contract focuses on user-centered machine learning, and it highlights how Palantir's government business is starting to pick up speed again. This proves exactly what we've been discussing. Palantir's tech isn't just hype. It's truly useful, so much so that the U.S. Army is investing heavily in it, and not just for a quick project. A 5-year contract shows long-term trust and commitment. The Army isn't looking for something that's going to fizzle out or be irrelevant in a few months. They're planning to rely on Palantir for the next half-decade, which speaks volumes about the value and impact of the technology. And the fact that government business is re-accelerating is huge. The government is one of the most reliable and long-term clients any company can have. This means Palantir is not only making strides in the private sector with companies like Airbus, but also deepening its role in critical, high-stakes areas like national defense. Government contracts can lead to even more opportunities, both in terms of expansion and credibility, proving once again that Palantir's potential for growth is far from over. Although Palantir is showing strong long-term potential, we can't ignore the rising concerns about its co-founder, Peter Thiel, and the upcoming $1 billion sell-off. Some people are worried, saying things like, Palantir is going to crash hard. By the end of 2025, Peter Thiel will make $1 billion off his investment, and retail investors will be left holding the bag. And yeah, these concerns aren't baseless. If Thiel sells off such a large chunk of stock, it could trigger uncertainty in the short term. Markets are sensitive, and when big investors like Thiel start cashing out, it can create fear that the stock is about to drop. Retail investors, regular people who have invested in Palantir, might panic, selling their shares out of fear, which could cause the stock price to fall even faster. The short-term outlook is unpredictable because in moments like this, emotions tend to drive the market more than facts. And here's something very important. In today's age of the internet, it's not just the event itself that plays a role, but how quickly speculation and rumors spread. News of a potential sell-off can circulate online in seconds, and people's reactions can snowball. This creates a situation where the fear of something happening can sometimes cause more damage than the actual event. For example, if social media floods with people speculating about a crash, it can cause a wave of panic selling, even if the company's fundamentals are still strong. The speed at which this information travels, combined with people's reactions, can magnify the impact, making the speculation more dangerous than the event itself. But it's crucial to understand that big institutions are still buying more Palantir shares every day. That says something important. Despite the noise, big players are placing their bets on Palantir's future. As one Twitter user pointed out, I'm pleased to announce that with Palantir doing 365% in the past 18 months, and consequently becoming the darling of Wall Street, my portfolio is reaching new all-time highs. Breaking down this tweet, we can see that this person is riding the wave of Palantir's impressive growth. But what's even more interesting is what he says next. He talks about how many investors, analysts, and even YouTube creators avoided Palantir or bet against it because they didn't do the necessary research. When Palantir's stock dropped from $30 to $7, most people got scared, thinking it was the end. But that's where they went wrong. Instead of panicking, this investor saw the drop as an opportunity to buy more, while many others stayed away. What he's emphasizing here is that successful investing requires doing the work, understanding the company, and having the conviction to go against the crowd. He warns against following the advice of Wall Street analysts and so-called experts, explaining that they often miss the bigger picture. The market can be unpredictable, and trying to time it is almost impossible. Instead, he advocates for a long-term approach, highlighting that by consistently buying shares, through the ups and downs, his students have been able to grow their wealth without taking unnecessary risks. This shows the power of staying committed to a well-thought-out plan. Even when Palantir was undervalued and many were scared, he and others like him saw the long-term potential and held on. The fact that institutional investors are doing the same now, continuing to buy up Palantir shares, should make it clear that this isn't just a short-term play. Long-term investors see the value here, and that's why Palantir remains such an exciting stock despite any short-term volatility. But what is your opinion on that? Comment down below. I'd be eager to read your opinion. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, please like this video, and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video with as many people as possible. Let's get this news out there.